Today we see the market collapsing, losing a very important support area, about to finally turn the medium-term trend into a downtrend. Now, this movement shows a lot of pessimism, but is there still hope? Is there still something that can happen next week that can make the market avoid a systemic correction? Well, what we are going to see in today's video is based on technical evidence, without bias or personal opinions about what I think might happen next, alright? Because this is the Finance Hydra channel, where there are no guesses or assumptions, because here we stick to the facts and use the technical analysis to help us design strategies. My name is Nathan. Welcome to another daily study. Now, as we can see here, SPY is clearly bearish. It is very bearish, making another bearish candlestick pattern today, dropping more than 1.5%, losing this support area made by this yellow line, this yellow area over here, and the 586, the previous top level, now multiple support level. We are closing below these key points, triggering what seems to be a head and shoulders chart pattern, a classic and a very dangerous bearish reversal chart structure. Now, okay, we are reversing the medium term uptrend. What's SPY's next technical support level? $576 to close this open gap over here. That's our first technical support level. However, if you ask me, the major support area for the SPY is this head and shoulders target, which is the size of the head projected in the direction of the breakout, which is around $563-$64, which, not by coincidence, it is precisely the previous top level seen over here on the weekly chart, the previous top level from July last year. Now, you may ask me, Nathan, is there still any hope that we could avoid a systemic correction? Well, there is, alright, because on the weekly chart, we are still not only in an uptrend, in a long-term uptrend, but we are still above two important support levels made by the 21 weekly moving average, the exponential moving average on the weekly chart, and this purple trend line over here. However, so far, there is no technical evidence suggesting a bottom signal in SPY. Therefore, we are bearish until technical evidence proves otherwise. Okay, so we can't say that SPY is a buy right now. I know we are just above this critical support area on the weekly chart. Okay, fantastic, but there is no technical evidence suggesting that we could recover from here. There is not a single bullish reaction. There is not a single bottom signal in this area yet. Maybe we could see next week, but guys, next week is next week, all right? It is in the future. Right now, with the information that we have today, there is no buy signal yet on SPY, all right? Not a single buy signal. The QQQ, on the other hand, the QQQ, yes, it is triggering a bearish pivot point. It is losing the previous support level at 509, but we have yet to retest its most dangerous inflection point, which is very close to the $500, which is not only a psychological support level because the market has a thing for round numbers, but it is also the previous support level. I'm so sorry. It is a previous top level from July last year. Now it is supposed to act as a support level for us, following the principle of polarity in technical analysis. What's more, the $500 area is very close to the 21-week moving average over here. Therefore, we see a quite interesting support level for the QQQ as well, just like in SPY's case, all right? We see a double support level on the weekly chart. So, again, if you ask me, Nathan, is there any hope that we could see a bullish reaction next week? Yes. And if we see one, the timing would be perfect. The problem is that we are losing medium-term support levels and we do not see any meaningful buy signal on the daily chart. All right, so again, we are bearish until technical evidence proves otherwise. So far, no meaningful bullish signal. Nathan, what if next week, next Monday, we see a miraculous recovery? We see a very strong bullish candlestick pattern on the QQQ closing above the 509 again. That could be a false breakout of this support level and a possible bear trap. All right, but again, we gotta see a very good and meaningful bullish reaction, preferably on Monday. All right, then and only then we may see a possible buy signal, a possible bottom signal on the QQQ, but so far this reaction is very weak. It is not enough for us to say, oh, QQQ is amazing right now. It is an amazing buy. No, it is not. There is no technical evidence supporting this idea at the moment. Next week will be decisive. Now, how this is going to affect our stocks? Because the indices are clearly bearish. Our stocks, most of our stocks will be bearish as well. Nvidia is also dropping. Nvidia is losing the 21-day EMA, the exponential moving average on the daily chart. We did reach, I'm so sorry, we made a new record high this week, all right? But right now, on the weekly chart, we see a possible top signal. A possible top signal, which could be, by the way, could be a possible double top chart pattern, all right? If you ask me, Nvidia is more like inside a rectangle chart pattern over here, all right? More like a sideways congestion on the weekly chart than anything else. We are still maintaining the bull trend on the weekly chart. We are still above the 132 support level. We are still above the 21 weekly moving average. So as long as we stay above these key points, we are not going to turn bearish officially on the weekly chart. But it is quite annoying to see such reaction on the daily chart, losing the moving average on the daily chart over here, okay? Just like on SPY's case, QQQ's case, there is not a single bullish reaction on Nvidia suggesting that it could be a buy. All right, maybe it is going to be a buy, maybe it is not. We don't know, because trading, guys, we don't need to know, I'm so sorry, because real trading is reactive. It is not predictive. We can't predict the future. There is not a single tool in this world that can help you to predict the future. TA, fundamental analysis, tape reading, quantum trading, right? Quantitative analysis. None of these tools will help you to predict the future. All right. Technical analysis is not here to help us to understand to predict the future, but it is here to help us in understanding what is happening right here, right now, so we can make the right decisions using risk management. Because, guys, risk management is even more important than technical analysis. All right, because if you don't have a crystal clear risk management, if you don't have a crystal clear strategy, technical analysis is going to be useless to you. Trust me, it is going to be useless to you. Maybe you're going to be a fantastic trader, right? Maybe you can nail 90% of your trades, but if you don't use a good risk management, trust me, you can lose all your money in just one single bad trade. All right, trust me, you can lose all of your money in one single trade if you don't know how to do things in this market. Therefore, I have to tell you guys to join the 5% project. I invite you to join our educational project, the 5% project, which is here to help you guys to understand the market, to make better, more informed decisions. Because there, I not only share signals, I not only share trading strategies with you guys, but I teach you guys. I show you why I'm sharing these signals, why we are going to buy, when we're going to sell, where is your stop loss. Even before we place the trade, I always tell you guys, the stop loss is here, the target is there. We are buying because of these technical evidences that suggest that yes, our stock is supposed to rise from here, therefore it is a buy if we break this key point, all right? I share crystal clear trading strategies. I teach you guys how to use your signals. And by the way, as a bonus, you get an exclusive ebook on technical analysis written by me. Okay, I wrote this ebook, and in this ebook, I teach you guys every single one of the most important top signals, bottom signals, how to use the inflection points in your favor in order to have an edge in this market, all right? Because we gotta have an edge, okay? We gotta have an edge, and we gotta work with a crystal clear strategy. Now, speaking by myself over here, are the 5% project's average accuracy rate is of 70%. Okay, 70%, this is quite good, it is decent, alright? But the most important thing of all is that we always use a very good risk management, because we are here to make money consistently through the years, alright? So, risk management is the key. You can have access to all of that and much more by joining the 5% project. The link is in this video's description. You have 7 days free. Absolutely free. Then you decide for yourself if you want to join us for real or not. So you have absolutely nothing to lose. Okay, so again, the link is in this video's description. Now, regarding back to Nvidia over here, if you ask me, Nvidia is heading towards the support line of this congestion, meaning that we are about to retest this key area over here. Then we'll see how to proceed, if Nvidia will be a buy again or not. Either way, guys, Nvidia is always such a promising stock, all right? But in the absence of a crystal clear buy signal, Nvidia is not a buy yet. It is not a sell either, all right? Because, guys, selling Nvidia right here, where is going to be your stop loss? Where is going to be your target? If your target is here, your stop loss is here above today's high, the risk reward ratio is not that good, okay? So I don't see Nvidia as a good sell, and I don't see Nvidia as a good buy. So right now, I recommend, what I recommend to the members of the 5% project at least is to stay on the sidelines. Wait for the big players to fight over Nvidia, and then after they finish, we'll see what's left for us. If we see a good, meaningful buy signal, then all right, we are going to buy near a support level with a good risk-reward ratio. If we don't, all right, we have more opportunities. Like, for instance, Tesla. Tesla is reacting nicely today, but you may be asking, so is Tesla a good buy right now? Guys, Tesla is still, it is not. Because it is still below a few resistance levels. For instance, the 21-day EMA, the $414, and we recently made a lower high, lower low, materializing a bearish pivot point. So as long as we stay below these key points, not making a higher high, well, we are not gonna enter bullish territory yet. And again, in the absence of a bullish reaction, we are just supposed to retest our next technical support level, which is $358, bearish until we see a breakout of our major resistance levels, medium term speaking. On the weekly chart, Tesla could easily drop more. We see the $358 as one of our support levels, but we still could drop to the 21 weekly moving average, okay? So we could drop more. All right, and this is, guys, it is such a bummer when I see, because I see some people leaving comments here on our comment area on my videos saying, Nathan, I bought Tesla, I don't know, around 460, 480s over here. Now I'm trapped. All right, now I'm trapped, guys. This is not supposed to happen. Okay, the idea of being trapped does not exist, because if you take yourself seriously over here, every single time you trade, for every single trade you place, you know where your stop loss and your target are going to be even before you place the trade, even before you enter the stock. If you see your buy signal getting triggered, okay, The plan is there. The plan is clear. You know where to exit, and you know where to sell at a profit if you see the trade going in your favor. But the idea of being trapped shouldn't exist, because we are here to trade professionally. We are here to make money seriously. If you don't use it, guys, stop losses. I know it is such a bummer to being stopped out of the market when a stock hit your stop loss. It is quite annoying indeed. I always try to be as robotic as possible, if I may use this word over here, as calm as possible, but it is quite annoying. It is always a little painful when you see your stock hitting your stop loss. I know it is painful, but guys, stop losses are here. As crazy as this sounds, they are here to protect us. Okay, they're here to protect us from a larger loss, because we don't know what could happen next. Since we don't know, we can't predict the future, we can't control the market, at least we can control our strategy. And again, if you don't have a crystal clear strategy, join our educational project, the 5% project. It is free to test, 7 days, see for yourself if you like it or not. If you like it, well, then join us forever. But for now, guys, always use stop loss order. If you don't, it feels like you have not, you don't have a plan. If you don't have a plan, then you plan to fail. All right. And then some people may complain about my behavior because, oh, Nathan, you are too serious, you are too boring. All right, I mean, why set stop loss? Tesla is incredibly bullish. It is bullish forever, right? I'm a perma bull over here. It is going to fly forever. Tesla is gonna be a $100 trillion market cap company. Elon Musk is gonna take us to Mars, and everyone in Mars is going to use Tesla as well. You are crazy. No stop loss. You are so boring. What if you die tomorrow, right? I mean, what if I die tomorrow? I have no regrets, all right? My dear friend, I'm not annoying, I'm not boring. You are not going to die tomorrow. You will become, when you get older, you will become a burden to your family, because in 2025, you are being totally reckless with your money. You disrespected your money. You disrespected yourself by not using stop loss, by not using a crystal clear strategy. Therefore, please use a stop loss, use a crystal clear strategy to guide you in this market. Otherwise, you are totally lost. Okay? Therefore, and guys, I'm not mad, I'm not upset. I'm saying this to you guys because I care about you, all right? I do care about you. Therefore, here in our community, we always work strategically, okay? So this is extremely important to every single one of us. Let's not disrespect our money. Please do not disrespect yourself. Always use a crystal clear strategy in this market. Do not trade based on your gut feelings, based on what you think it could happen, based on emotions, right? No, let's use technique. Let's use strategy, okay? By the way, subscribe to this channel if you are new here. If you are still watching this video for roughly 19 minutes and you are not a subscriber, it is because this channel is for you. Subscribe, click the like button. Let's study the market every single day together. Let's trade strategically. So now let's continue our analysis. Let's see how AMD is doing, because AMD can't stop dropping, right? Just look at this. 3 days straight, right? Massive drops. Guys, AMD is not a buy at all right now. We are losing a very important long-term support level, 121. By losing this support level, we are completely rejecting any possibility of a bullish case over here right now. But Nathan, what if next week we see a fantastic bullish reaction closing above the 121 again? All right, maybe AMD will have a chance of recovering, of bouncing to higher levels, but right now, I'm sorry to tell you, but right now, AMD is not, definitely it is not a buy. And in the worst case scenario, we could drop all the way down to the $93 again. Okay, so let's be careful, okay, because we could see AMD dropping more, we could see Tesla dropping more, therefore use stop losses. Now, Palantir is still dropping, it is correcting, but today we see a bullish reaction, okay? Is this a bottom signal? No. Yes, it is a bullish candle. I know we are dropping, but it is a bullish candle, but as long as we don't see confirmation of a bottom signal, it is not necessarily a meaningful bullish reaction, okay? We gotta see Palantir at least closing above today's high next week in order to trigger a meaningful bounce, maybe to the 21-day EMA, maybe to higher levels over here, but even if we see this scenario materializing, remember, we are in a bear trend, we are in bearish territory, so any bounce could be just another dead cat bounce. So yeah, we gotta be very careful, but Nathan, would Palantir be a buy? I mean, I want to buy in order to capture a bounce over here for swing trading purposes. For swing trading purposes, yes, this might be acceptable if the risk-reward ratio makes sense, but so far, we don't see confirmation yet. Again, next week will be more decisive, and the IWM looks quite interesting because we, at the 5% project, we tried to buy IWM over here because we saw a technical double bottom chart pattern, okay? Classic double bottom chart pattern, however, we failed in triggering this double bottom pattern, so it couldn't trigger our buy signal. So okay, it was not a buy, all right? It was almost a buy. It would be a buy if we saw IWM closing above $226 above the 21-day EMA, then we could see this double bottom chart pattern getting triggered, suggesting a sharper, a more robust recovery, possibly to retest the $245 again, but it failed miserably in triggering our buy signal, okay? Failed miserably. Now, Nathan, are you still looking to buy IWM? Yes, we are. Okay, and if I see any buy signal over here, I'm gonna promptly share on our 5% project. But guys, so far we only see another bearish reaction. Yes, we are near a support level. Interesting, very interesting. Okay, this is a point we should pay attention to this. Okay, so if next week we see any bottom signal in this area, it is going to trigger a buy signal for us. Okay, it is going to trigger a buy signal. Of course, according to my trading methodology, okay? Right now, MicroStrategy is another stock that is on my personal radar as well, okay? We at the 5% project, we are looking for an entry point over here, but MicroStrategy lacks a crystal clear buy signal, okay? On the 1-hour chart, we see the price stabilizing right above the 61.8% Fibonacci's retracement, and right now we are finding a resistance below the 50%, below the 21-hour moving average over here. So we have yet to see a crystal clear breakout of these resistance levels, but we are respecting a few support levels, and this is very interesting. Okay, if we see next week a meaningful bullish reaction, maybe closing above the 21-day EMA, closing above the 50% Fibonacci's retracement on the 1-hour chart, closing above the 21-hour EMA as well, this triple resistance level, then we may see another buy signal on MicroStrategy. Right now, we are just on the sidelines waiting for the next opportunity. And again, if you are still watching this video and if you agree with the ideals here in this channel, you are more than welcome to join the Finance Hydra channel. Click the like button to support me because your like is very important, and join the 5% project for more signals, for more strategies, for detailed strategies that I deliver to you guys with a crystal clear educational purpose, and of course to help you to improve your performance in this market. Join us over there. It is free to try. The link is in this video description. Thank you so much for your audience, my dear friends. Have a nice weekend. Stay safe. Bye bye.